Well, good evening, everyone. My name is Sean Murphy. Thank you so much for taking the time out of your day and evening to join us for an educational opportunity to look at young medical professionals and how can we help them in their future as they look to buy a home, potentially build wealth over time, and you're just getting started in your career. Thanks so much for joining us. I'd like to take this opportunity here to introduce myself. My name is Sean Murphy. I'm a residential mortgage lender based in the San Francisco Bay Area. I've been doing this for 23 years. It's exciting for me to be able to serve our community with young medical professionals saying, you've got a lot on your plate in coming out of grad school, getting started in your careers, and how do I get started? Do I have to wait? What are my options? What's out there? So this is an opportunity for us to share some education with you. Feel free to take some notes. If you have any questions, I'll be offering the opportunity to schedule a one-to-one with you at any time, and then we can go over your situation for free just to understand how do you plan for the future as it relates specifically to your situation. So you've had a busy day and it's late. I want to make sure to get started and be respectful of your time. The topic of our conversation today is, hey, I've got $500,000 in student loan debt. Am I ever going to be able to buy a house? The answer is you might be surprised. Opportunities do exist. Today, we're going to talk about a home buying guide for young medical professionals. In comparison now, what is the dream? What is the reality? Here you are, you've spent years building your career with deciding where you want to go to school, the cost and expense, getting you through that education. You're now graduating and you're trying to figure out what can we do? How can we get started? The nice thing about homeownership is that as you look at different job opportunities to consider, and you want to live in nicer areas or what areas that you want to serve that community for the next 30 years, buying a home is a great financial tool, and it also offers stability. It offers long-term wealth building. But yet many medical professionals face some unique financial challenges. So the nice thing that we can share is that loan programs are specifically designed for you. Today, we'll talk about the following 5 items. Why is traditional financing and how it can be challenging today for young medical professionals? There is a program that's actually built for you in helping you get started. Student loans and income are treated differently, followed by key advantages of the physician loan programs. Then we can talk about next steps towards home ownership. As we begin our discussion, the problems with traditional mortgage that can come up for young medical professionals, they might include what we'll call the debt to income challenge. While you're new to the financing game, the acronym DTI means debts to income. With traditional lenders looking at their guidelines to get you started, they weigh this debts versus income calculation as a major component for approving a loan application. As a young medical professional, you most likely, in many cases, have student loan balances that may impact your ability to get approved. And yet, there is well, what if, and down the road, I'm going to be making a lot more money, and, I should be considered now for that future income. Most lenders are going to say, sure, come back to us when you have that income and you're already working. So this is something that can be used ahead of time to plan for your future, especially as you're trying to decide where you may want to serve and what community anywhere in the United States. There are upfront cost barriers with traditional loans. Examples that may include our down payments for many lenders could be anywhere from 3.5%, depending on the loan product, but more likely 5 to 20% down. Where would you as a young professional come up with those funds? And if you do look to borrow less than 20% down, will there be a private mortgage insurance, also known as PMI, included in your monthly payment to qualify? These are some upfront and ongoing costs that might put you in a position of, I'm going to hold off and wait. Well, let's keep talking. Now, as we move to an idea with a physician mortgage loan, this is something that's designed for medical professionals. It allows for flexible financing because these investors know that you have a unique path in terms of getting yourself started as a resident intern and then becoming a full medical doctor. This product is designed for those who have student loan debt, but also have high income potential. We're considering are those who are physicians, residents, and fellows. Now, the financial world has acronyms to discuss specific products, guidelines, etc. And the medical profession is no different. You have all these different acronyms for different professionals. So I have included here a list of the specific medical professionals that do qualify for this loan. We all know MD as a medical doctor, DO, Doctor of Osteopathic Medicine, DDS as your dentist, PharmD as your pharmacist, veterinarians, DPM, and then CRNA are all eligible professionals that could qualify. We'll consider residents, fellows, and interns as they get started in their educational quest towards home ownership. Some of the product highlights that you'll be interested to know will include, as we look at your student loan flexibility, if your loans are in deferment or you are in forbearance, that in qualifying for the loan, these loans could be excluded from the underwriter qualifying you for this loan. And so if you are looking at your current income received during your residency and fellow and your medical internship program, that's something that offers some flexibility. It might help you qualify and everyone's different, but this is something that is unique to the world you're in. We also look at the possibility of qualifying for future income. If you have a contract to become a medical professional and we are looking to close within 150 days before your start date on your employment, that we can use that employment contract letter as our basis in projecting your income to qualify. That's exciting. Does that make sense to you? This is something that we obviously welcome further questions on. You can put them in the chat. And reminder to all that after this is over, you are invited to consider we can plan a specific meeting and talk about your situation and how that can benefit you. So as we put it all together, in this example, we're saying if someone has $500,000 of student loan debt that is deferred, they have a signed contract where they're looking at making $350,000 a year. They may have additional debt, but you look at we're excluding the debt from the DTI due to the deferment of the student debt. We are basing your income based on your future salary, and this allows you to qualify for a property today. So that's exciting because you may be thinking, what do I do? How do I do it? And where do I even start? But this is something that could be a strong opportunity for you to consider. Some of the key advantages, again, we have low to no down payment. If you want to borrow a home that's up to $2 million in value, you can get a $2 million loan with no down payment. On top of that, that you could consider, I now can buy sooner and not worry about home prices continuing to escalate. I want to get in now. Then I can start servicing the debt of my mortgage, but also the student loan debt with that higher income that I'll be generating. And down the road, I can consider my options as far as refinancing. Gives me more flexibility, but it gets me into the home now while prices are lower. Also, we look at, well, there's no private mortgage insurance, no PMI on this loan. Even if you have no money down, you're not making an additional monthly housing payment for PMI. So that allows more income to work for you with regards to qualifying for this mortgage. We have the guidelines that are flexible and can be worked on a case-by-case basis. This examples include if we need closing costs and reserves to help us secure the loan, those can come from a gift from a close family relation. Mom and dad want to help and they want to see their professional live closer to where they are. They may offer to give you that gift to help you. We have the opportunity to say, you know what, if case by case basis, if you have medical collections, there might be flexible reserve requirements. Again, when we meet on an individual basis, we can talk about your situation, where your credit is, and discuss how that can help you still plan, whether it's now or in the future moving forward. So your next steps, let's prepare early. Let's go ahead and review your credit and financials. Shall we put together a pre-approval application, get those key documents together, make sure we understand where you are with your student loan status, and talk about the timing of securing that employment contract. Working with a specialist is going to be beneficial to you that understands how these products work to help you succeed. We want to get you fully credit, underwritten, and approved so that you're good to go when it's time to shop. And it might be a competitive marketplace, but you have all your ducks in a row and ready to make it happen for you and your family. So as you look at everything in today's discussion, we're actually closer than you might think. I mean, you have a career, it's now supported. You have some future income that's in your favor. And you can see here that our investor looks to remove those, what we consider traditional barriers to qualify, to help you succeed. Because we all know we need more doctors out there, and yet it's a good risk from a lending standpoint. If you have any additional questions, planning for next steps, I'll include here the contact info on my calendar so that we can schedule a time to talk about you and your needs. And if you have others that you think could benefit from this, the beauty is that we're available to offer this product anywhere in the United States. And so helping young medical professionals succeed in today's work after they finish their degree is important. I want to take this time to thank you for listening. Appreciate you coming out after dinner hours to be able to go through this, and look forward to being of further service. Have a wonderful day. My name is Sean Murphy. I can be reached at area 415-710-6342. Have a great evening and talk to you soon.